They told me I was wrong for 10 years. 10 years of people laughing, skeptics rolling their eyes, financial media dismissing the whole thing as a scam, a joke, a passing fad that would be gone by next Tuesday. And every single time the market got rough, every dip, every crash, every ugly red week, they came back with that same smug energy. See? We told you. But here's what those people never understood. While they were busy laughing, something else was quietly happening. Something that doesn't make headlines. Something that doesn't trend on social media. Something that the average person scrolling through their feed completely misses. The people with the most money were buying. Let that sink in for a second. Because it's not a rumor, it's not hopium, it's on-chain data, and it doesn't lie. Wallets holding over $1 million worth of XRP, we're talking whale-level accumulation, now control nearly 74% of the entire XRP supply. In just 6 months, those wallets absorbed 1.53 billion XRP. While retail investors were panic selling every dip, while the skeptics were clipping their "I told you so" videos, the people who actually understand how wealth is built were doing the opposite. They were loading up. That pattern, retail fear, institutional accumulation, is one of the oldest stories in financial history. It played out with real estate in 2009. It played out with equities after every major crash. And right now, in 2025, it is playing out with XRP in real time. So let's talk about why. Let's talk about what the smart money actually sees when they look at this asset, because I don't think most people have connected all the dots yet. Start here. There's a conversation happening in the highest levels of finance about tokenization, not the vague, buzzwordy version you hear thrown around at conferences, the real version. The version where people are starting to realize we don't even have language yet for what's coming. One of the smartest builders in this space made a point recently that completely reframed how I think about all of this. He compared it to the early internet. Nobody in 1995 was sitting around saying, "Yeah, and someday people will be live streaming themselves playing video games for millions of viewers." That wasn't even a concept that existed, and yet here we are. Tokenization is the same thing. Right now, people are modeling it out and saying blockchain could be a $30 trillion industry within the next few years. BlackRock said it. Standard Chartered said it. Serious institutions with serious analysts are putting serious numbers on this. But what if even those projections are conservative? What if the products that will actually define this space haven't been invented yet, because you can't invent them until the infrastructure is in place? That's what makes this moment so unusual. We're not late. We're early to something most people haven't figured out how to imagine yet. Now here's where it gets technical, and I want to walk through this carefully because I think a lot of people skip past it and miss the most important part of the whole thesis. There's a concept floating around in serious XRP analysis circles, and I mean people who actually understand how settlement infrastructure works, about the mechanics of what happens when an asset like XRP becomes the liquidity layer for trillions of dollars in tokenized value flows. The math is actually pretty straightforward once you see it. If you're going to move multi-trillion-dollar institutional volume through a settlement asset, that asset's market cap has to be large enough to actually absorb those flows. It cannot be a gradual process. You cannot slowly, politely ramp the price up over 18 months while institutions are trying to clear transactions. The infrastructure has to be capitalized before the volume comes in, not after. This means the revaluation, when it happens, is not going to look like a normal bull market. It's going to look like a switch being flipped. A technical necessity, not a speculative event. I was in Singapore not long ago, and I heard something that stuck with me. The gist of it was this. The utility creates the initial price movement, but once speculators see that utility translating to demand, real demand, not trading demand, settlement demand, they pile in. And that secondary wave is what goes vertical. It's a feedback loop, and once it starts, it doesn't stop gradually. David Schwarz has basically said the same thing in different ways at different events. Fixed supply, exploding demand. You don't need a finance degree to understand what that equation produces. Brad Garlinghouse made a similar point at MIT once. Actually, I think the quote was something like, "You don't have to go to MIT to understand what happens when supply is fixed and demand keeps growing." And he was talking specifically about institutions, not retail, not traders, endowments. The biggest pools of capital in the world that, not long ago, owned exactly zero crypto, not $1. And they're entering this market now, carefully, quietly, methodically, against a fixed supply. Let's zoom out even further, because this is the part that I've been talking about for years, and I feel like it's finally becoming visible to more people. Starlink. Bear with me here, because this sounds like a detour, but it isn't. One of the most compelling arguments for why XRP has a trillion-dollar destiny isn't just about Western financial institutions moving money faster. It's about the 1.4 billion people on this planet who have no access to traditional banking at all. No branch, no account, no credit history, nothing. These are people living in rural Africa, Southeast Asia, remote parts of Latin America, places where the internet itself has historically been a luxury. Starlink changes that. What Starlink is building is essentially a planetary internet grid, universal connectivity. And the investor who put over $1 billion into SpaceX said it plainly. If you want to create broad distribution of wealth, you need smart people. Smart people need access to information. Access to information requires the internet. And Starlink is how you give the internet to someone standing in the middle of the Sahara. Now layer on top of that the emerging reality of AI agents operating within this same global infrastructure. Agentic economies, where software is executing financial transactions autonomously, at scale, across borders, in milliseconds. That whole system needs a settlement layer. It needs something fast, cheap, and neutral that can handle volume that would crush traditional banking infrastructure. I remember years ago when Ripple ran a commercial that showed an astronaut beaming a payment down to a wedding on Earth. People thought it was just marketing fluff. I didn't. I thought it was a preview. And watching everything that's unfolded since the partnerships, the regulatory clarity, the institutional adoption, the Starlink trajectory, I think that commercial was more literal than anyone realized. Speaking of regulatory clarity, this is another major catalyst that I think is being dramatically underpriced right now. The Genius Act, the stablecoin legislation, the broader push toward clear crypto regulation in the United States, these aren't just policy discussions. They are the unlocking mechanism for hundreds of billions of dollars that are sitting on the sidelines in institutional portfolios, waiting for legal certainty before they move. Charles Schwab's digital assets team has said directly that clarity legislation could trigger a significant rally. Not because the fundamentals change overnight, but because the confidence barrier gets removed. Galaxy Research put an August 3rd window on the table for potential presidential signature. That's a specific date, not vibes, not hope, a specific projected window based on legislative tracking. And when that clarity comes, the money that's been waiting doesn't walk in, it runs. Meanwhile, Ripple itself has been doing something that quietly destroys the oldest attack on this asset. For years, the narrative was that Ripple had no business model except selling XRP, and therefore holding XRP meant you were eventually going to get dumped on. That narrative is dead. Brad Garlinghouse has said Ripple is on track to hit $1 billion annual revenue run rate by end of 2026, and that number explicitly excludes the XRP on their balance sheet, payments, prime brokerage, RLUSD, treasury infrastructure, hidden road clearing trillions annually. This is not a company propped up by its own token anymore. This is a financial infrastructure company that happens to be building around one of the most strategically positioned digital assets on the planet. RLUSD alone is already sitting at over 1.6 billion in market cap, and it's growing. That's a real product with real traction. Now, I want to take a second to talk about what not to do, because all of this bullish analysis can create a dangerous mindset. The feeling that because the destination seems clear, any path to get there is justified. It isn't. I see people going on margin to trade speculative tokens, betting on short-term price movements with borrowed money on assets that have been downtrending for over a year, hoping for a reversal. That is not investing. That is gambling with money you don't actually have. In crypto, margin doesn't give you more opportunity. It gives you more ways to lose everything faster. Don't do it. Don't let the excitement of a macro bull case drive you into micro decisions that can wipe you out before the big move even arrives. Patience is the actual edge here. The whales aren't using margin. They're accumulating spot. There's a reason for that. So where does this all land? Somewhere between cautiously optimistic and genuinely excited. And I mean that in a grounded way, not a hype way. The regulatory environment is the clearest it's ever been. The institutional interest is the most concrete it's ever been. The infrastructure build-out, Ripple, Starlink, tokenization rails, is further along than most people realize. The on-chain data shows the people who understand this best are accumulating, not distributing. And the mathematical reality of what happens when multi-trillion-dollar settlement volume needs a liquidity layer that currently can't hold it is not a small thing. It's the whole thing. 3 digits isn't a fantasy. Given everything converging right now, it might actually be conservative. If this breakdown gave you a new angle on any of this, share it. The more people who understand what's actually being built here, the better. Subscribe, hit the notification bell, and I'll see you in the next one.